Now, here is Ticky Fullerton on Your Money.
Hello, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally. And here we are on the eve of a very important state election. Well, coming up, can Gladys Berejiklian's last-ditch sprint take her across the line first this weekend? All the latest on tomorrow's New South Wales state election with the Australian state political reporter Andrew Clennell and Your Money's chief business reporter Leah Shanahan. Retail businesses going to the wall, but Premier Investments defies the drab retail market to deliver another record result. Chairman Solomon Lew and his Chief Executive Mark McInnes join us to talk just how they did it. And Alibaba tells Australian businesses to use our local Australian Chinese community to test their products as a great guide for what works in mainland China. Chief Executive Maggie Zhou joins me. Well, now the New South Wales Premier has spent her last day of her campaign plugging the coalition's policies. Gladys Berejiklian has been joined in key marginal Sydney seats by former Prime Minister John Howard. Meanwhile, opposition leader Michael Daly has spent his last day on the campaign trail back at the Sydney Football Stadium, telling voters they'd pay nothing to refurbish it if he was elected tomorrow. So what should we expect this weekend? Will there be a clear winner, or will a minority government be the final outcome? For more, I'm very pleased to welcome Your Money's chief business reporter Leah Shanahan and the Australian's New South Wales political editor Andrew Clennell joins us live from our CBD studio where he's very busy. Andrew, thanks for joining us there. Look, quite a lot has changed since I last spoke with you, including we've had that debate between the two contenders and also a few bloopers along the way. Can that change things for the result?
Yeah, it certainly has, Ticky. So I think about a week ago we were looking at the potential of a Labor minority government in New South Wales. That now seems to be off the table. I think it's highly unlikely because Michael Daly's had a dreadful week. He couldn't even name the cost of his education policy at that Sky News People's Forum, and a videotape was released showing him making anti-Asian immigration comments, and that kind of put Labor on the defensive. They had to campaign in seats they weren't thinking they'd have to, with high Asian populations, their own seats. So what we're looking at now is most likely a coalition minority, because Gladys Berejiklian only need lose 6 seats to be a minority, but then she could govern with the help of only one independent out of a 9-person crossbench. So that's probably the most likely outcome. And the second most likely outcome is that she sneaks over the line in coalition majority, that she loses 4 or 5. That's kind of where we're at as we head into the election tomorrow. According to most pundits, observers, according to the internal polls of the parties, that's kind of where the situation is.
Okay, Leah?
Andrew, I find it very interesting. You note that even though Daly, I think it's fair to say, has lost the campaign, the polling has still been very tight. What are the latest polls showing, both internally or otherwise? And is there a chance that despite this bad week that he's had, it won't actually shift the polls that much?
Yeah, well, I think that might be the case, but I know that the tracking seat-by-seat polling of both parties moved after the release of the video around his Asian immigration comments. And at that time, Labor was just edging ahead in a couple of seats like Penrith, or just behind in Heathcote. So that move of 1 or 2 points in pretty much across the board meant that the hopes for them slipped away. I mean, if they, at that point, they were looking like potentially the government would lose 9 and Labor would lose 6 and the rest would be shooters, greens and independents. But in that situation, they would have been in a reasonable position to form a minority government. They need 13 for a majority Labor. But you know, 2 or 3 seats have probably been lost this week for Labor. So that's kind of where it's at. It's you know, we had a Galaxy midweek, which was 50-50 still, but that was before his debate gaff. And, you know, look, I'm just talking to people on both sides of politics, and where I've described it's at is where they believe it's at the moment.
And Andrew, after all that horror in Christchurch and now talk about where the Shooters Party sits, how does that all play into this?
Well, it has had a small role. Certainly there are a lot of Labor voters who don't like this idea of doing any sort of deals or preference deals with the shooters. Also, the shooters, fishers and farmers look like a really good chance of picking up the seat of Barwon. You know, whether, and that's about 50-50, so whether this helps the Nats, you know, stories around that. remains to be seen in that seat. Also, I can even tell you in Orange, which is the only lower house seat the Shooters Party has, their primary vote dipped from 52 to 39 in the last week. They'll still win the seat because they'll get Labor preferences, but I guess I'm saying in a seat like that, which is a bit more regional, a bit less rural than Barwon, the issue has had its effect on that party.
Now, one of the sideline stories in this election, obviously former Labor leader Mark Latham running in the upper house, I believe. What are his chances, given the trap shoot that is the New South Wales upper house?
Oh, look, he's got every chance, Leo. That profile and that name on top of the ballot paper, and they poll pretty well if you do a statewide. But, we kind of don't have them in, often people don't poll them in the statewide because they're only running in 12 lower house seats, and that affects your upper house vote as well. But I don't think there's any doubt people will vote Shooters or One Nation or even Conservative Coalition in the lower house, and will probably vote for Latham in the upper house. Even some of the Howard Battlers would vote for Latham in the upper house. It'll be interesting to see how he holds it together there. He's been pretty coherent and very articulate during the campaign. I mean, the guy's been a federal opposition leader. Now he's playing a B grade, I guess, reserve grade. But, I'm looking forward to seeing him using parliamentary privilege, or perhaps I shouldn't be looking forward to it.
Andrew, interesting to see John Howard supporting Premier Berejiklian there. We haven't really seen that much of Scott Morrison.
No, well, they've tried to avoid Scott Morrison, really. There's no doubt about that. He didn't get to speak at the launch. Seen him at one or two announcements, but really they think they're better off without him. Whereas John Howard's very popular still in a seat like Penrith, where Lindsay was, where Jackie Kelly was. And I think it's kind of fascinating. Gladys had him out there again today, having had him out there once. Shows you that Stuart Ayres, the sports minister, is in some sort of strife. I heard he was in strife, and that the numbers have got better for him. But the fact Gladys and Daly were in Penrith today, and John Howard as well, suggests to me that is a real contest to watch tomorrow night, a fascinating one.
Well, Andrew Clennell, look, thank you so much. We'll watch you through the weekend, and all the best for it. Thanks for your insights. Thanks, Leo.
Thanks.
OK, well, let's go to the board of Navitas, which has unanimously recommended shareholders vote in favour of a $2.1 billion takeover offer from BGH Consortium. BGH Capital has been circling the education provider for months now, as we've been mentioning. And if the deal proceeds, it will be the largest ever buyout by an Australian-based private equity firm. Under the agreement, shareholders will receive $5.83 per share. It comes after the board angered some of the company's biggest shareholders last year after it rejected a $2 billion takeover offer from BGH. Well, bring back Leo in here. Leo, this is quite an important deal, not least because it's the first of its kind, given that they had a go at Healthscope and didn't work there. Yeah,
it's a really interesting deal. Obviously, as you said, it would be the largest Australian private equity deal, but it's got all this interesting backstory, Ben Gray's involvement, Rod Jones coming back to the company, and of course, from a policy perspective and indeed a business perspective, this teaming up with Australian Super. So this kind of tag teaming in this consortium between Australian Super and BGH.
So this is the beginning. I mean, when I spoke to Heather Ridout, who chairs Aussie Super, the other day at the AICD conference, so she said, OK, well, look, we're looking for growth. We've got all this super money that everybody's put in there. We're looking for growth, and we really look to maybe 3% of private equity, I think she said, funds under management now grow to 10%. This is how they're going to do it. Yeah,
and I mean, it raises a whole bunch of questions around these bidding processes. As you said, look, Heather Ridout's, right. I mean, if they can do it, why not? And if it does have good potential for growth, and that's what these funds, that's their role.
So, Leo, just take me through some of these interesting issues, because, for example, I don't think Australian Super is on the board of Navitas, nor was it, I don't think, on the board of Healthscope. But if it's got a very big shareholding in a company like Navitas, it has duties to its members, doesn't it? So then it does a deal with private equity, which locks it exclusively into TPH, into BGH, yeah? And then another possible deal might come along and it's still locked into that.
So the question arises, are they working in the best interests of their shareholders? Are they working
or their members,
or their members? Yeah. And are those shareholders being denied the prospect of a better opportunity with another partner if they're locked into this consortium? You've effectively got Australian Super on two sides of the deal, right? So are they going to be consistently, whose interests are they going to be consistently working in? Is it going to be the shareholders of an Navitas, for instance?
And if you're a director on a public company board like this, should you be welcoming big super companies if they're going to take you off the boards?
Yeah, exactly. So, you know, it's all very well to say, oh, well, you know, you should welcome us as long-term shareholders, but then you have this situation that once they get a foot in, they do a deal with private equity and it's to see you later off the boards, and that suits us.
So I guess it depends on what sort of company you've got and whether you think that's a likely chance. And it kind of plays into the short-termism that we've been talking about on boards at the moment. This is one of the problems, isn't it? How do you get rid of all this short-term expectation?
Yeah, exactly. And look, I think it's a fascinating area because you've got this amazing amount of capital sloshing around super looking to park. You've got this amazing amount of capital as well in private equity at the moment looking for big deals. Ben Gray was expected to have a bigger deal than this earlier. The HealthScope one fell over, but yeah, I mean,
because he's pretty much just started out.
Yeah, and it goes in, you know, and then how far off are we from super buying into debt, you know?
Oh, look, fascinating.
Private companies, yeah.
Leo Shanahan, really interesting deal. Thank you very much.
Thank you.
After the break, Premier Investments interim results back in the black. We'll hear from Chairman Solomon Lew and Executive Director Mark McInnes next.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. What if you thought that the news is all dark in retail? Think again. Premier Investments interim profits rose 13% to $89 million, with revenue also climbing 8% in what it calls a dynamic retail environment. Online sales was the biggest growth area for the business, jumping over a third year on year and contributing close to 13% of all sales. Looking forward, Premier will focus on expanding its Smiggles brand overseas, launching on its Amazon European marketplace, as well as moving into Asia, Canada and the UAE. Its overseas online and wholesale arrangements come as the company says historical paths to global growth are no longer relevant in the face of technological changes, pointing to the risks associated with long-term leases. Well, shareholders will receive a dividend of 30 cents a share. And I should say that Brexit was a little bit of an issue for the company, as you'll see. But for more on this, I spoke with Premier Investments Chairman Solomon Lew and Executive Director Mark McInnes. Solomon Lew, Mark McInnes, well done on these half-yearly results. Solomon, can I ask you first? I was very surprised to see your mature businesses, those traditional brands like Just Jeans and JJ's, being able to withstand the retail market at the moment. How has this happened?
Well, you know, there are a group of iconic brands that we have. We're been working very hard for a number of years. Mark has put together an outstanding team of leaders, and in turn they've put together a great team of executives, and it's all about the execution. So we've done well. We've executed, you know, from picking the product, manufacturing the product, putting the product on the floor, the visual. Everything's come together, and you know, they've done a particularly good job.
Yeah, Mark,
much better than the competition.
It's very interesting because, once again, I mean, these businesses haven't been performing as well as they have in this half. Is it cost cutting as well? I mean, what do you think the secret has been to your success this half?
Well, Ticky, you know, firstly, as we've reported a record sales result, a record EBIT result, a record dividend and extremely strong cash flows at both the Premier level and the Premier retail level. I would say to you, Ticky, that, look, we've got 5 iconic clothing brands and great brands in Peter Alexander and Smiggle, as well as a terrific online business that's been built by a great group of executives. And we really are a product and service and online focused company, and all three of those things coming together across all of those 7 brands and our online business has delivered the result.
Well, it's very. I'll come to Smiggle in particular in a minute, but just looking at those traditional fashion brands, when other retailers have literally gone to the wall, you're, Solomon, actually closing some of the original key shops in Chapel Street, poor old Chapel Street. But is that part of just being tough with landlords and making sure your cost structures are right?
Well, you know, our like-for-likes are doing well in relation to our brands. Yes, it's true, we've grown the business. Those 5 brands are growing, and but where landlords are not being reasonable with rents and not charging rents in line with traffic and store refurbishments and mall refurbishments, etc., we're exiting the market. So we've been talking about this for some period of time. We've closed, over the past few years, we've closed over 100 stores. But at the same time, we're growing our online business. So, you know, we have plenty of partners that are prepared and to spend the capital and improve the centres and make good rental deals for the long term. We've got great partnerships, and where we don't have, well, we're going to exit. And you'll see that, you know, it could be that there'll be a few more stores that we'll have to exit. Today we announced the closure of Rundle Mall in South Australia of our Just Jeans store, only because the landlord was unreasonable. And some of those stores that we've exited have remained empty for the last year or 2.
Yep. I'm really interested in your strategy to deal with some of these sort of tougher times. If I can come to Smiggle. Mark, very important, I think it's 25% of your sales now, Smiggle, but you're not going to make your targets, and that, as I understand it, is largely driven by Brexit and Britain.
Yeah, Ticky, the way I'd describe that is throughout 2018, the Premier Board and management team recognised that in today's world, rolling out a global brand was not just about multi-country owned store rollout. And in fact, last September, we announced to the ASX an accelerated Smiggle growth strategy through 4 pathways, being wholesale, online, concession and owned stores. So we were well ahead of the market in announcing that strategy, and for the last 6 to 9 months, we've been ruthlessly implementing that strategy to the point where we announced today a series of announcements, actually, where we're growing from 10 existing countries to 20 countries, going from servicing the brand up to a population of 145 million to an incremental 775 million population, to launching with Amazon in France, Germany, Spain and Italy, and to announcing as part of that wholesale announcement, wholesale arrangements with the iconic retail partner in each of those countries in South Korea, Indonesia, the Philippines, Thailand, the United Arab Emirates and Canada.
Yep. So
we would say that we were well ahead of the market in coming to that position. Well, Brexit is a completely different issue to all of that. That is related to the political environment of the UK, where they don't even know what's going on. That's led to deep uncertainty in the UK economy.
Yes.
It's led to a massive retail carnage in local retailers. Well, we're not immune to what's going on in that country, but pleasingly for our shareholders, we had already recognised pathways to growth that would deliver higher EBIT margin with materially less capital and generate significantly higher cash flows than our previous plan.
So you've got this capital light strategy. I mean, who knows what's going to happen to Brexit? It could go on. It could just not be a sort of one-off blip. It could go on for another year or 2, who knows? But you've got this capital light strategy. It seems to me that you're testing maybe 3 or 4 different ways, and depending upon what's successful, then you might commit more capital in that direction. Am I right?
Well, that option is certainly available to us, and we're not ruling anything else out, but your analysis of our situation is 100% correct. But within that, we are expecting material Smiggle sales growth and profit growth to come through that time period.
And same store sales you're not splitting out. So we don't. I know there was a question on the call, analyst call, but you're not splitting out same store sales for Smiggle, as I understand it.
No, we don't in general with all of our brands, Ticky. The only reason that we did that in our iconic clothing brands this half is to demonstrate the difference between our like-for-like sales and our total sales. So our like-for-like sales in our 5 iconic brands across Australia and New Zealand was higher than our total sales because we closed 16 unprofitable stores. And if we don't show that difference, then it's hard for the market to see what our true underlying performance is. Nothing to do with disclosure, all to do with demonstrating the difference in performance.
Okay, online sales are becoming more and more important. I mean, what are they now overall? 75 million, I think. That's out of your total of 680. That's becoming really significant. So your decision to go onto Amazon now is quite important, I think.
Yes, I mean, a great credit to Georgia Chewing and her entire management team, along with our head of technology, Frank Dessar. Excellent implementation of a global online system supported by the Premier Board's decision to buy our own distribution centre. So we have a fully integrated online distribution capability. As we've seen in the release, our sales in the UK from nothing 4 years ago are now 19% of sales. Our global sales, where we have an internet presence, is nearly 13% of our total sales.
Yes.
And you are quite right, the customer is choosing that form of channel increasingly. So it's not difficult for us to talk with the biggest online retailers in the world about partnering in countries where they have strength.
Now, Solomon, I must ask you about this because we've got actually the Alibaba Australia CEO, Maggie Zhou, on the show a little later. But interestingly, as I understand it, you've also seen, for Amazon anyway, other players coming in, buying maybe Smiggle products elsewhere in Australia and putting them on Amazon and making a bit themselves. Is that what has driven you to go direct to Amazon and now in talks with Alibaba as well?
Oh, not really. We look at the opportunities per country and what it means for our business. At the end of the day, we're looking at a much larger opportunity, and we're exploring different avenues to bring about higher sales and higher profits for our shareholders. So at the end of the day, we work in the best interests of what's good for us, and they're the opportunities. So there are we're doing a lot of business in Asia. We understand that Amazon have a big business, as does Alibaba in China, and Amazon is probably more in the northern hemispheres, etc., in USA and Canada. But we've got lots of opportunities. Yeah,
Mark, do you think you might do something with Alibaba?
Well, we've got a great respect for Alibaba, as you would appreciate, Ticky, and,
yes.
and in fact, Maggie and I have held many meetings, so
I bet you have.
Say hello to her for me and tell her I look forward to our next catch-up.
All right. All right. Now, look, a couple of last questions. One on capital allocation for Solomon, because interestingly, I know you said quite a lot, been quite vocal about Labor's policy on franking credits, but you at this stage are keeping your powder dry. You've got quite a lot of franking credits there, I know. You're reasonably cashed up. Perhaps a bit of surprise that you decided not to do much in terms of either a special dividend or any other capital allocation decision.
Well, we had a board meeting earlier this week, and we're continuously reviewing the opportunities, and I'm not sure whether we haven't seen any of the new legislation that is going to change the values entirely change the value of franking credits, but we're working on that.
All right, so that is a work in progress. OK. Now, finally, I need to ask you, Solomon, of course, this mandatory one on Myer. Now, we had Myer results just come through as well. You have been unusually quiet. Those results have been, better than they've been in a long time. And I know you've stood back from commenting on John King and management and left any criticism to the board. But, I mean, long term, Solomon, the idea of getting out of property, the idea of looking at online and some kind of central distribution centre that Myer would need, this is going to cost a lot of capital. If you are a long-term investor in Myer, do you think they have sorted it out yet?
Well, we don't really know their plans at this point in time. They've made certain announcements, but it's all work in progress. I have no idea of what they will be able to deliver on. And as you mentioned, it's going to take a lot of capital. So, we're standing by.
All right. And what are you going to do with your capital finally?
Well, we look after our capital for our shareholders and we invest it wisely. We've got some technology that we're investing into, and when the opportunities arise, we'll invest, and that'll be in the best interests of all our shareholders. So, we're in a really good position, as Mark said, record sales, record profits, record dividends. You can't do more than that in these difficult economic times.
Solomon Lew, Mark McInnes, gentlemen, thank you very much.
Thanks, Ticky.
Thank you.
Yeah, well, two happy cats there. Now, let's get some analysis on the Premier result, a few other things. Michael McCarthy from CMC Markets joins me now live at the desk. Michael, yes, happy cats, as I say, but the market was off for Premier.
Yeah, well,
slightly.
It finished off, but it gyrated through almost a $1 range between $16 and $17 today. So the market couldn't make up its mind, really.
So the big news that, this target growth on Smiggle, which is, must be the biggest brand since Foster's, let's face it, in Australia, the big drive and their targets, they're not going to make them because of Brexit, they say, and so they're doing sort of a few other things. But the market seemed to take that as a sort of bit of a scare thing.
I think they took it as a warning, but I think that's focusing on the negative. We were discussing before the impressive performance in JJ's and Just Jeans.
And these are businesses that are just traditional clothing businesses. You walk in, they've been there, they've been on the high street or in shopping centres for years. They haven't been doing very well, and suddenly they've managed to get the cost out. What is it?
Ticky, the numbers tell the story. 8% revenue growth in the current constrained retail environment, leading to 13% profit growth. So they've increased sales and increased margins.
Yeah.
It's extraordinarily good.
Yeah.
I'm very surprised to see it finish down today.
Yeah.
I suspect there'll be a rethink on Premier Investment share price next week.
Well, that isn't true. And look, another big one this week, Soul Patts, Robert Milner I spoke to. Yeah, you're a fan? Yeah.
Big fan. The reality is very few people can beat the market consistently over time, but it looks like Robert Miller and his investment team are able to do it, delivering once again a terrific result. The shame, of course, from a shareholder point of view is that the share price had already run very hard into it. And while it did make a modest gain after this report, I think a lot of the good news was priced in, because we know a lot about Soul Patts investments because they're publicly listed.
New Hope had been reported earlier, hadn't they?
Brickworks. So we had a pretty good idea it was coming, but nonetheless, still very satisfying for
real value investment. Yeah. Okay. Now, what do you make of this BGH Navitas tie-up? The BGH's first really big.
Well, they've landed one.
They have, haven't they? Ben Gray must be pretty happy. Yeah.
Well, it must be. But at just over $2 billion, there's a significant risk here, or about $1.5 billion US dollars.
But he takes it off the boards. Yeah. He can do what private equity do, which is like turn it around, drive it hard over whatever period, 5 years or whatever.
The question, though, for BGH and for the broader private equity community is, will they get the reception when they come back to the boards that they have in the past? There's been some very disappointing performances from companies that have been bought back by private equity, and I think there'll be a lot more scepticism. Nonetheless, if they turn it around and they've got the numbers over the longer term, they could do very well.
And we're going to see more of this. So you'd think that just like the privatisations, that private equity will be feeling that they should leave a little bit more on the table for investors if they're going to do this again and again and again, don't you think?
If they're going to get the deals away. And I think, too, a number of recent examples have shown how the the books can be cooked.
Yes.
And so investors will be looking out for any signs of that sort of behaviour.
Quick one on the Pact Group. Now, this was the Amcor spin-off. What's been going on there?
Packaging Group here, it's been under sustained pressure. It's trading at all-time lows.
Yes.
Generally trades around 2.5 million shares a day. Yesterday, 34 million shares changed hands at the all-time low. Now, that is extraordinary.
Hedges?
That's what the reports are saying. I don't know. If I did, I wouldn't be able to say. But clearly some very strong interest at those low prices, and the share price went up another 3% today.
All right, now look more broadly. Let's go to some macro. Bonds are rallying. What's that saying?
Well, Ticky, this is telling us why the markets are up, and particularly the US markets. It's about easier monetary conditions and the Fed stepping away from its withdrawal program, because all assets are rallying. It's not about economic growth, which is what we like to see share markets going up on. It's about easier money, and for mine, that means we're at bigger risk than we were on previous rallies.
Yeah, even though we've got potentially another fall in rates coming?
Well,
here, for example?
Ticky, we've seen some soft data. I understand why people are saying it. And some people have been banging the drum for a long time before the soft data appeared, and they're now claiming victory. I think it's a bit early for that. Until we see the data, I'm not moving into that camp. I must admit, my one rate hike by the end of the year call is not looking too good at the moment, but it only takes a quarter data to turn that around.
We've got monetary easing coming with the budget, though.
Exactly. Well, fiscal.
Fiscal, sorry, not monetary.
Fiscal stimulus coming.
Fiscal stimulus coming from the government.
Rates up, rates up.
Yes. We'll leave the monetary easing for down the track.
Yes.
Yeah. All right, Michael McCarthy, brilliant. Well done. Thank you very much. After the break, the EU agrees to extend the Brexit deadline. British broadcaster Nick Gowing will join me next.
This is Ticky on Your Money, covering the big business stories.
Well, let's head to Europe now. In fact, start with Britain. This is the shot that the British tabloid is running in the Mirror is running to show what tomorrow will look like on the motorways of England and Wales, with a truckie, or should I say lorry, protest in a pro-Brexit protest. Yes, pro-Brexit. You'd think that the truckies would be the ones worried about the scary clog-up of a port traffic jam under a no-deal Brexit, but no, it's a message to Mrs May and to Parliament to deliver on the referendum promise. Well, overnight the British Prime Minister, Theresa May, finally lost her cool. Perhaps she should have lost it months ago. Should have lost it in Brussels and not in London, fuming against MPs. But anyway, this time next week was supposed to be Brexit Day, but 7 days out and Mrs May has been over in Brussels again. This morning, our time, very late Brussels time, she secured a new arrangement with the European Council, a delay to Brexit until May 22, provided Mrs May's deal, or something like it, is approved by the House of Commons next week. If, however, the Prime Minister loses a third meaningful vote on the floor of the House, then the extension will only last until April 12. Who knows what will happen after that? Well, here's Mrs May just after midnight Brussels time.
What this decision tonight does is show the clear choice that is available, open to MPs. Getting the deal through next week in a meaningful vote means that we can have that extension to the 22nd of May, get our legislation through, deliver on the referendum, leave the European Union and do it in an orderly manner.
So, once more, what to think? Well, French President Emmanuel Macron has warned that Britain is heading for a no-deal Brexit unless the vote goes through. He says, quote, in case of a no vote or a no, directly it will guide everyone to a no deal for sure. Mr Macron said, this is it, we are ready. Well, Monsieur Macron might find his European project a little easier to achieve without Britain, I'd think. I liked one witty cartoon today which says, Brexit should now be the end of May, not the end of June. Well, look, Brexit is just one great political disruption in the world. There are many others, indeed disruptions in the economy, in business models, in life, the rise of the vegans, wealth inequality, and the first world turn against coal. These are all issues that leaders are grappling with, thinking ahead and thinking the unthinkable, if you like. Well, Nick Gowing is a fellow who founded the Thinking the Unthinkable project back in 2014, and I've been talking with him off and on since then. Nick was actually a presenter for BBC World News for 18 years, spent another 18 years with ITN, but he's been doing so much more than that. He's an academic, he's now an advisor on leadership challenges to the President of the UN General Assembly. Pleased to say that he actually joins me now live at the desk. Nick, great to have you here.
Nice to be here, Ticky.
So many things to talk about, but can I just get you to talk about Brexit for a moment in terms of disruption and leadership?
That's why I'm here 12,000 miles away. It is really, truly destructive. Look, like you, my job for many years has been following the uncertainties in the world. I've covered so many revolutions, I've covered Eastern Europe and so on. The idea of what we've got into and where we've got to, no one could have predicted it, except that it was going to be like this. It's like a Rubik's Cube. You can just about get one side together and then the rest doesn't work.
I haven't heard that, actually. That's very good.
It is really, I can tell you here, 12,000 miles away, that it's become really destructive to friendships, to the building of business, the loss of confidence. It's a deeply destructive moment,
well, I mean,
including for Parliament.
Yeah, but from Australia's point of view, I mean, should we bother to think about a possible free trade agreement?
I can't tell you about that. In the end, I'm a British citizen still, and I say that because one wonders what kind of united kingdom this really is going to be. The Queen is getting on, the kingdom is just about together. I was up in Scotland recently. There is that sense of everything coming apart. Maybe it will come together again. Maybe things are going to be much better than many assume. But look, when you look at what's happening today with a parliamentary, in Parliament, we're now allowed to put our names forward for a petition. And in one day, 1 million people have added their names saying we've got to end Brexit, we've got to not have Brexit.
What do you make of the sort of suggestion that Parliament take over the government executive in terms of the power and making decisions going forward? Because that nearly happened the other day.
It could easily happen. I mean, the whole thing has become extraordinarily dysfunctional. And when the Speaker of the House of Commons actually cites a ruling from 1604 as the basis for taking a decision, it is unreal. You could not write this in a film script.
All right. Let me take you back to Davos, where you were. You're part of the World Economic Forum, I know. January, the oh shit moment. What was that about?
I wrote this up as you're quoting it on air as the oh shit moment, because what you're seeing, and I've been running this project about thinking the unthinkable way back from 2014 when Putin decided to do dreadful things in Ukraine. Other things started happening, like the migration crisis, and everyone was caught off guard. And I, like you as a former journalist now, I was saying to myself, something is changing. And I thought maybe I'll wind it up in a year, but 5 years on, I'm still doing it. And the reason is because everything is becoming unpicked. And in Davos, the reason why it's an oh shit moment is because a large number of those people at the top are beginning to realize they cannot continue operating companies, running governments, running public services in the way they've been doing it, because they realize the public is not just rising up, it's what we call not populism but pushing back against anything it doesn't like, including products, including ethics, including morals, including the purpose, including the values of companies.
And Thinking the Unthinkable, the book, was getting leaders' views on all of this.
And many of them, on a one-to-one basis, very confidentially, have been incredibly frank and saying we're scared, we're overwhelmed, but we've got to somehow keep going. It's a bit like Theresa May, suddenly somehow keeping going. And what you're seeing is potentially a dysfunctionality, and it's the speed. As one very senior person said, it's like trying to eat an elephant in one mouthful, because so much is happening on the regulatory front, on the customer front, on the voter front. How do you pull it all together? The amplitude is getting greater, the bandwidth and the frequency and the wavelength is getting shorter and shorter and shorter, and it's all coming as a crunch. And as one senior figure said to us, it's a bit like wartime. It's wonderful listening to your previous guests who were saying profits are up, sales are up, and so on. It is hard to find that kind of thing in many businesses at the moment. And this is not just about Brexit, but it's the dysfunctionality.
The issues you're talking about resonate so well here in terms of increased regulation. We've just come through a Royal Commission into financial services, and you know what is the right amount of profit that companies should be making, and this pressure. I mean, the other great issue now is wealth inequality, and we have huge amounts of money, investor money, now pressuring companies on not just climate change, but also on possibly wage hikes.
2 years ago when I was here and we were talking about the banking industry, no one really wanted to accept the kind of things which the Royal Commission has now brought out.
Right.
And that's what you're seeing. But it's broader than that. It's the Me Too movement. I mean, if you and I were talking 18 months ago, we wouldn't have been talking about inappropriate behaviour, largely by men, of a sexual nature. Look at what is happening. It's the decimation, in many ways, of the executive class. And so many things are happening. A year ago, we had a chemical weapons attack. It's these kind of things.
Is anybody, I mean, you said some of these senior businessmen are unthinkable, but they're scared, right?
Yes,
Is there
their
any
words and
danger?
ours.
Yes, any danger of overshoot on Me Too, overshoot on, over bank bashing, overshoot on, I mean, is that an unthinkable or thinkable scenario?
I would say there is a danger, and as we know, there's been a backlash on Me Too because some of the claims have been proven to be wrong or malicious in their own way. But let me broaden it.
But just in reframing society as a result of these great pushes, I'm sort of...
Well, let me give you another way of expressing the reframing. Jeff Mulgan, who is a friend of Australia, and he's the chief executive of the National Endowment for Science, Technology and Arts, NESTA, he says the problem is it's zombie orthodoxies. Zombie orthodoxies. And the reason he says that is because of our findings, which are the conformity which qualifies you for the top actually disqualifies you from understanding the level of disruption and what has to be done. In other words, you think you've got to the top.
No connection with the...
Exactly. And you can't adjust the mindset, the mentality, the behaviour and the culture. And I tell you, whether I had 5, 10, 15, 20, 30, 40, 50 senior executives sitting in the room, it doesn't matter how many, all of them would be nodding. All of them would be nodding because we've hit a real raw nerve. So the challenge is how to embolden those at the top, how to make sure they know they can thrive on change. And that's where our project is pushing people at the moment.
Nick, I do hope you come back and talk to me more about how the project is going, maybe in a few months' time if you get back here. It's such an interesting space. Thank you very much
indeed, Ticky.
Nick Gowing, thank you very much. Well, after the break, Alibaba Australia Managing Director Maggie Zhou.
Now, back to Ticky.
Welcome back. One global business that is pushing the boundaries with its e-commerce business model is Alibaba. The goal, to get China connected with the world. And now one of Alibaba's fastest growing areas is Australia. And within that, for consumers, is food. There are nearly 2,000 Australian brands on the company's Tmall e-commerce platform, which is connecting Australian producers and manufacturers with the Chinese market. For more on Alibaba's relationship with the local industry, I spoke with Alibaba Australia's Managing Director, Maggie Zhou. Maggie Zhou, nice to see you. Tell me about the Chinese market. How are sales going for Australian retail?
Well, China today actually transforming from made in China to consuming China. And today middle class in China is growing. And there are more than 300 million and middle class people in China.
Yeah, so how much does Australia feature on Alibaba's Tmall?
Well, Australian products are performing much better than ever before in our platforms. And today, Australia also ranking the third among all the countries selling to China.
So that's jumped from, I think, 5th to the 3rd.
Yeah. So since 2017, the Double 11 we're ranking the 3rd, and the year before is 4th, and the year before that year is 5th.
So why is Australia growing in importance?
I think Australia has a very strong country image with clean and green and natural products, and this is like a trusted Australian brands. And Australian, the environmental factor really helps a lot for that. And all the kinds of the products for eat, for drink, and for use on your skin are really well sought after by Chinese consumers.
Maggie, we think of Tmall as selling beauty products, perhaps dried milk, things like that. But you're actually interested now as well in fresher products.
Yeah, exactly. Fresh products from Australia really great potential in China market. And Double 11 Shopping Festival last year, Australian rand is increasing to 775% than the year before. And also, just thanks to some initiatives in China, we have our own Hema Fresh supermarket store chain around China today.
So what sort of products will Chinese consumers be looking for on the food front?
The food front, actually today, the adult milk powder and the vitamin and the cereals really still also playing a very important role. But from fresh side, actually beef, lamb, and also seafood. And today also wine is a big potential in China market.
Right, wine. Because we think of China as a good place for wine as an export market, but you're looking at wine on the Tmall platform.
Yeah, exactly. It actually is on Alibaba ecosystem, online and offline combined together is really a great potential for Australian wine. And the last year, Double 11 Shopping Festival, Australian wine's growth is 33%, much higher than some old world wine. And exactly many of the Australian wines today, many middle class, and we will see that the young generation, new millennials really just want to have the higher quality lifestyle, really want to taste more Australian wine.
So the Alibaba business model down here is to get Australian businesses to sign up to be on your platform. How are you going with your businesses down here?
We actually, today in Australia, we have about 50 people here. The local team much stronger than before, and we are just representing Alibaba, the whole economy, and helping the business to access to China market. So today, not only for Tmall, maybe Tmall and Tmall Global, just will be the entry for the business, but the whole Alibaba ecosystem will be the big scale in China market. And today also, like the Hema Fresh, today we have more than 150 stores around China, just only serve the residents living in 3 kilometers radius and allow the parcels be delivered within 30 minutes to their door.
So what sort of Australian businesses are actually using Alibaba as a cross-platform opportunity to China?
Like Chemist Warehouse, today they are the largest global merchants on our platform.
Yeah, that's extraordinary that Chemist Warehouse is actually the largest.
Yeah, they are the largest. Yeah, they work very closely with us. They have a Tmall Global store and helping many of the brands access to China market easily. And also they use Alipay to access Chinese tourists coming here and using Alipay to pay in their store. And yeah, that's will be fantastic.
So you can actually go to a store here in Australia and use Alipay at the checkout at Priceline.
Yeah, exactly. Chinese consumer, just can get used to your Alipay, and today in China, the society is more and more cashless.
And you see Alipay going into a lot of other Australian businesses. Is there opportunity there?
Yeah, of course. Today I just, came from my hotel, come here, and also use Alipay in the taxi. Yeah, CapCharge actually have already have enabled more than 20,000 taxis in Australia and enable them to use Alipay to access Chinese tourists as well.
And Maggie, you have an expo, I think it's in August every year. What sort of businesses do you want to attract, and what should they be doing?
Well, Alibaba's mission is to make easy to do business anywhere. So we are mainly focused for small and medium-sized company. And today there are more than 2,000 Australian brands already very successful and in China markets through Tmall and Tmall Global. But we see still many small brands that need to be incubated and then to go to China market. And today here, there are many Chinese communities, they are doing that job. They're using the live streaming and telling the story behind the brands and to access to Chinese consumer directly. So Expo is really, designed for them.
So the Australian Chinese population here are actually performing a very good service for small business as a test, if you like, for what mainland China consumers would be interested in.
Yeah, exactly. So we have a Taobao Global platform, have the live streaming channel. So those merchandisers living here, they will just, they're familiar about the brands and also know about the story behind it and just telling the story using the technology to Chinese consumer.
And a big question to finish with, we've seen the big global tensions between China and the US. We've seen Huawei, the huge Chinese company, also caught up in these tensions. I'm wondering, Maggie, does Alibaba worry that it too might at any point get caught up in these trade wars?
Well, China and Australia continues to enjoy the positive and the mutually beneficial trade relationship. Yeah, so Alibaba always will be the strong supporter for free and open trade. Yeah, and also those I think those we are in favor of those policies can break down the barriers of trade, especially for small, medium-sized companies.
Yeah, so you're just going to go on and keep doing your business, I guess.
Yeah, exactly, and Australia also, will benefit for the free trade agreement. And this year, especially for wine, the duty actually is to go to zero. So that's a huge potential for those products from Australia access to China market.
Maggie, Zhou, great to talk to you as always. Thank you.
Thank you.
Well, that's all for the show tonight. On Monday, I sit down with the Australian Business Council CEO Jennifer Westcott for a special interview ahead of the budget. Until then, thanks for your company.